Let's start with the Indian rupee, which has risen today in tandem with other emerging market currencies. Turkey today surprised the markets by raising interest rates from 4.5% to 10% to quell the recent turmoil that led to a sell-off in the EMs this week. The rupee also has seen strength for a second straight day, nearly 0.25% up on your screens. The day ended at 62.41. John Paul Smith, Deutsche Bank Global EM Equity Strategist, now joins us from London with his views on the currency. John, hi. The currency weakness fears are worsened as we have the Fed meeting also coming up after the kind of sell-off that we saw last couple of sessions. Do you see aggressive tapering worsening the fund flow situation for Asian countries? And is tapering already discounted, or has it become a non-issue?
My own view is that tapering isn't such a big issue from here. For one thing, the environment for the global economy is actually quite disinflationary. Eventually, the Fed's action is likely to be influenced by the market action in emerging markets and the sell-off that we've seen in currencies, but also by the economic weakness that we'll see, partly as a result of this sell-off in currencies. And we would expect consumption through most of the emerging economies, at least the big emerging economies, to be significantly weaker than people were expecting a few months ago.
John, also, how do you see the Indian currency performing? We have seen dips of 68 in 2013 and then some recovery, and again we seem to be in for some weakness. How are you viewing it all?
The risk, of course, to India, I think, on the currency front, or one big risk, is that if we see real problems developing in China this year, and I think there's a real chance that we will, then we could see significant outflows from emerging market equity funds. Given that most investors now are probably overweight, or overseas investors probably overweight in Indian equities, that could have quite a dramatic impact on the currency. So that's where the potential downside would come from. But Deutsche's core forecast this year is that the rupee will be roughly flat against the dollar.
All right, John, thank you so much for joining us with your sense on the Fed tapering and the rupee as well. That's the view coming in from Deutsche Bank. Let's also get in then Upasana Bhardwaj, who's economist, and Wwatch Bank. Also joining us is Vijay Bhambani, author and CEO at BSPL India. Upasana, hi to you first. And what's your sense now with the RBI out of the way, a surprise rate hike, of course, from them, but ahead of FOMC tomorrow, how are you looking at the rupee performing?
I think, Manisha, going ahead, I am looking at RBI's surprise repo hike as being positive for rupee. So that is something which I think I would assign a pretty high weight to ensuring that rupee does not decline sharply vis-a-vis the other emerging economies. If you were to look at the recent sessions as well, we did not see that sharp a sell-off in INR as compared to others, and primarily that has to do with the fact that RBI has been very, very vigilant, and the kind of policy efforts that have been established earlier in the past couple of months. There is more confidence that is attached to INR currently. So we should not unnecessarily see a very sharp volatile moves in INR. So what I'm looking at is basically not very sharp appreciation from current levels and not very sharp depreciation from current levels. I'm looking at a 6150 to a 6350 kind of a band existing for some time to go. But yes, looking at the medium term, what I'm looking at is the biggest event risk I would assign to is the political uncertainty that is there moving into April, March. That's where the big point could be, where big uncertainty could be, where we could see this range break off from these current levels.
Sure. Upasana, so with the Fed tapering announcement coming tomorrow evening, are you expecting the EM markets to shiver yet again? Are you factoring in a $10 billion taper?
I think 10 billion taper has more or less been factored in, so I would not expect any significant move from the levels. But yeah, we'll have to watch out for the kind of tone that is there, or the kind of guidance that is there. But I do not expect very hawkish kind of guidance from Fed. So not much move from the action from Fed actually.
Upasana, the next RBI, policy perhaps would now be in March, and as the governor pointed out, it would be done every 2 months, the review for that. That will be just ahead of elections. Do you see that to be status quo? Do you see an interest rate decline coming in for that one? How are you expecting the governor to react?
Well, Manisha, talking about a decline in interest rates, definitely not. I am not looking at any possibility of a decline in interest rates for a prolonged period of time. Clearly, RBI has given us a very clear indication that now the focus would be on CPI inflation. They have implicitly targeted inflation targets, talking about in a year's time at 8% and then moving on in another year's time at 6%. And CPI, especially the core CPI, we're not seeing that really move. So unless we see the core inflation, core CPI inflation really start inching down, I do not see any scope for decrease in repo rate at all. Having said that, yes, I expect a status quo for at least a few months to go before we could see possibly the impact of the monsoons next year on food inflation, hence the impact on CPI trajectory. So at least in the near term, I expect RBI to maintain a status quo.
Vijay, how is the rupee looking on charts after that 1% gain in the markets yesterday? It's closed nearly 0.25% up today as well. So would you say that some consolidation, some correction could continue in the trade tomorrow too?
I think quite likely, Manisha, because what you have seen is expiry of the January future series, and there have been rollovers and the regular usual pull and push on expiry day. So what you are likely to see is the potential for appreciation in the rupee being restricted to 61.60 to 61.80 in the spot segment, and I would still maintain my view that 63.25 is a very critical threshold in the spot segment. Once the dollar moves above 63.25, then it will start to appreciate rapidly. But till then, I think there's going to be a lot of tug of war between the bulls and bears, with 61.60 on one side and 63.25 on the other.
All right, so that's the 2 rupee range really, where the rupee could be continuing to trade, but it really is the FOMC meeting tonight and the reaction of that would come on the emerging markets tomorrow. Is that what we would watch out for? But with that, Upasana, we'll let you go. Thank you so much for joining us.